How would you feel if I told you that with trading, you could potentially earn more in a day than most do in a month? But here's the twist. The key isn't about gambling your savings on wild risks. It's about strategic decisions and timing. Let's jump right into the most crucial factor: understanding market trends. Picture this: you're surfing. To catch the best wave, you need to spot it before anyone else. Trading's no different. Recognizing patterns in market behavior puts you in the driver's seat. Now, why wait for an opportunity when you can make one? Day trading is all about capitalizing on those short-term fluctuations. Think of it as a series of small wins adding up to a big victory. Tools like indicators aren't just fancy graphs. They're your guide, simplifying complex market data into actionable insights. Quick moves aren't about being reckless. They're about being informed. Understanding when to enter and exit a trade is where real skill lies. Consider the mindset of legendary traders. They aren't fearless. They're calculated, prepared for both wins and losses. Ready to dive deeper? Let's keep this momentum going. Speaking of calculated risks, let's demystify the art of reading market indicators. Imagine having a crystal ball offering glimpses of market movements. Ever heard of moving averages? They're like the heartbeat of the market, revealing trends through average prices over time. Now, grasp subtle shifts with the Relative Strength Index, or RSI. It measures the speed and change of price movements, alerting you when the market's either too hot or too cold. There's also something called volume analysis. Think of it as the crowd's voice in a stadium. When lots of shares are traded, it's like the noise rising, hinting at significant action. Sellers and buyers are clashing, and with it, opportunity knocks. But what truly sets apart average traders from savvy ones? It's the discipline to stick to their trading plan. Emotional trading leads to missteps. Setting clear stop-loss orders keeps your investments safe from unexpected downturns. It's the financial seatbelt in your trading journey. Lastly, consider diversification. Trading isn't just about stocks. Forex, commodities, and crypto offer alternative avenues to explore. Each market has its own rhythm, expanding your opportunities to profit. As you harness this holistic approach, remember, trading isn't just skill. It's a journey of constant learning and adaptation. Ready to transform potential into achievement? Stick around. Speaking of diversification, let's talk strategy. Diversifying isn't about scattering investments aimlessly. It's a finely tuned orchestra where each instrument, like Forex or commodities, plays its crucial part. Have you ever heard of asset correlation? It's how different assets react to market shifts. By mixing uncorrelated assets, you balance risk and stabilize your returns, even when markets get rocky. But don't forget the strategy of scaling in and out of positions. Imagine entering the market like stepping into a pool. You don't dive head first without testing the water. Start small, assess the market's pulse, then expand your stake as trends confirm your predictions. Similarly, scale out. Take partial profits when things go your way, locking in gains while staying in the game. Moreover, aligning your trading schedule with market hours can maximize potential returns. Each market has its prime time, and being active during these high-volume periods ensures you're riding the most lucrative waves. Monitor global events, economic releases, geopolitical news. They sway markets like a pendulum. Staying informed equips you to anticipate changes, adapting strategies swiftly in response. And here's a promising angle: using trading algorithms. These aren't just for the pros. Automated strategies based on predefined criteria can execute trades with precision, maintaining discipline by eliminating emotional bias. Ready for the next big step? Stay tuned as we unveil more strategies ahead. Algorithmic trading. It's like having a 24/7 assistant executing trades for you, tirelessly reacting to market conditions. Let's demystify how you can tap into this modern marvel. Algorithms can analyze vast data sets in seconds, spotting opportunities you'd easily miss. They're programmed with specific rules, like entering a trade if a stock hits a certain price, and execute orders faster than any human could. Got a knack for coding? Customizing your own trading bot can be immensely rewarding. But if coding sounds daunting, don't worry. There are platforms offering pre-built algorithms where you can simply tweak parameters to align with your goals. Think of it as setting your trading preferences, risk level, entry, and exit points. Then, let the algorithm take over. Yet, even the smartest algorithm isn't foolproof. Market conditions change, and that's why regularly reviewing and updating your strategies is vital. Consider it maintenance for your financial engine. But before you dive headfirst, always test your algorithm in a simulated environment. It's like a dry run, helping you understand real-world functionality without risking real cash. Learning from each result enhances the algorithm's efficiency. As you harness these tools, remember, technology is an aid, not a crutch. Balancing human intuition with mechanized precision can truly supercharge your trading journey. Ready for more insights and strategies? Keep watching. Balancing automation with intuition. This is where trading becomes an art. But an essential layer that often goes unnoticed is risk management. Imagine building the tallest tower without a sturdy foundation. That's what trading without a risk strategy looks like. So, let's highlight what secures your financial structure. First up, position sizing. It's about determining how much to risk on each trade relative to your account balance. This guards against the emotional roller coaster of trading. For example, a rule of thumb is never to risk more than 1 to 2% of your capital on a single trade. This ensures you live to trade another day, even if a trade goes south. And don't underestimate the power of having a trading journal. Documenting your trades, both wins and losses, unveils patterns you might overlook. This diary becomes your blueprint for refining strategies and cultivating discipline. Diversification within risk management is more than just asset variety. It includes different strategies. Consider having a mix of short-term and long-term approaches, hedging positions, and utilizing options to protect against adverse market moves. It's about having multiple arrows in your quiver, ready for varying market scenarios. Finally, psychological resilience. Trading is an emotional battlefield as much as it is a financial one. Practice mindfulness techniques to stay sharp and detached. Emotional control can be the edge that keeps you ahead. Let's wrap it up with powerful strategies next. Stay engaged. By now, we've peeled back the layers of successful trading, understanding trends, reading indicators, smart diversification, leveraging algorithms, and solid risk management. Each aspect builds a comprehensive strategy that turns potential into profit, all while keeping your financial safety net intact. Ready to take control of your trading journey and start seeing results? Subscribe and hit the bell icon to not miss out on more valuable trading insights. Every technique here is a step towards financial growth, so don't stop learning now. Dive into the comments, share your thoughts, or let us know your favorite trading strategy. Remember, your next big trading breakthrough could be just a click away. Happy trading!